Have you ever noticed how, despite earning a decent salary, so many people still feel like they're just scraping by? You're not imagining it. There's a quiet, almost invisible force in our daily finances that keeps most of us trapped. Credit cards, car loans, and debt nobody warns you about. Scene shift. Visuals of city streets, cars, apartments. Let's paint a familiar picture. Imagine someone in their late 20s, working in a mid-level corporate job in the US or Europe. After taxes, their monthly take-home pay is around $4,500. Sounds comfortable, right? Enough to rent a decent apartment, eat out occasionally, maybe save a little. But then reality hits. The rent for a one-bedroom apartment in a decent neighborhood eats up $1,500. That leaves $3,000. Now, they drive a brand new car. Not a luxury car, just a reliable model. Say, a $35,000 vehicle financed with a 5-year loan. That's roughly $600 a month in payments, down to $2,400. Credit card? Of course. Dining out, subscriptions, a spontaneous weekend getaway, maybe $800 a month. Now we're at $1,600. Student loans? $400. Utilities, groceries, phone, insurance, another $800. Suddenly, our $4,500 salary doesn't feel so big anymore. You've got about $0 left to save, and one unexpected expense, even $200, throws everything off balance. Scene shift. Narrator close-up. Reflective tone. What's happening here isn't bad luck. It's a systematic trap. It's not just the debt itself. It's how it interacts with human psychology. Credit cards make spending feel painless. Car loans make upgrading seem attainable without thinking of the long-term cost. And lifestyle pressure, friends, social media, expectations, keeps you buying more than your budget allows. Let's look at the math behind the car loan, for example. A $35,000 car at 5% interest over 5 years ends up costing roughly $39,500 in total. That's $4,500 in interest alone, over 5 years. Add credit card interest, averaging 20% APR, and that $800 monthly expenditure could cost an additional $1,500 a year, if not paid in full. Suddenly, a manageable lifestyle turns into a multi-$1,000 hidden drain each year, and it's invisible until it's too late. Scene shift. Calm graphics showing cumulative debt over years. The psychological reason this happens is simple. Our brains respond more to immediate gratification than to long-term consequences. That night out feels good. The new phone feels exciting. That car gives status. We aren't wired to calculate what it will feel like 5 years from now when interest compounds, bills pile up, and savings remain zero. Most people ignore the slow, invisible erosion of wealth because it doesn't feel urgent. But over a decade, the difference between someone who spends like this and someone who thinks carefully about the flow of money can be hundreds of thousands of dollars. Scene shift, visual contrast, modest apartment, modest car, calm expression. Now let's flip perspective. Financially intelligent people don't just think about how much they earn. They think about what each dollar does over time. They're conscious of the cost of instant gratification, not out of fear, but out of clarity. They might choose a reliable used car instead of a brand new model. They pay off credit cards in full to avoid hidden interest. They understand the difference between status-driven spending and real wealth accumulation. Their lifestyle grows slowly, deliberately, rather than reacting to every impulse or social pressure. It's not glamorous, it's not fast, but it's effective. They wake up 10 years later with security, options, and the ability to make choices rather than feeling trapped by unseen debt. Closing scene. Narrator, calmly reflecting soft background visuals of a quiet city morning. So, the next time you glance at your bank statement or wonder where your paycheck went, remember, it's rarely about earning more. It's about understanding the subtle forces shaping your financial reality. The debt you don't see, the interest you underestimate, the pressure you absorb, all of it adds up quietly over time. You don't need fear. You don't need gimmicks. You just need awareness. And that awareness alone can make you feel smarter, calmer, and more in control than most of the people around you. Soft CTA, calm, reflective tone. If this perspective helped you see your money in a new way, consider subscribing. That's it. No hype, no rush, just clarity,